I'm joined by John Meyer, Head of Natural Resources and Mining at Fairfax. Lovely to have you on the programme, John. Well, let me just start by asking you then about the prospect of BHP and Rio Tinto selling off their mining businesses. I mean, is that a wise move given that prices are heading for a fourth year of gains?
This is typical for where we are in the market. BHP and Rio Tinto see themselves as bulk commodity producers. They're making huge profits from iron ore and copper and bulk commodities in general, coal again. And diamonds just seems a little bit irrelevant to the boards of these companies, but I think they should really remember where they've come from. Each one of these businesses started off relatively small within their portfolios, and although the diamond industry's never been that huge in global terms, it's still a very important marketplace. So there's great value within these businesses. It just doesn't really stack up against the scale of the bulk
other
commodities
parts of the
right
business.
now.
Yeah, so Rio Tinto, BHP looking to exit the diamond industry, as you say. Why, though, is BHP struggling to establish its presence in iron ore?
Well, Rio Tinto is so far ahead of the game. It had better prospects and projects within Australia, which is BHP's own stamping ground, and has better expansion plans and is just a much bigger player. What's very interesting is that the Vale share price has been coming off, and yet Rio Tinto and BHP have done very well. We've had very good months for these companies, probably a certain amount of window dressing, I think, towards the quarter end.
Yeah.
But we're looking for investors to take a bit more of a risk-off approach.
Why is that? They've had a good month, but from what you're saying, not set to continue.
There are some doubts over what's going on in China. China's stated that it's going to go from this sort of infrastructure-driven growth to domestic consumer growth. It really depends on how quickly they achieve that. They're bringing down, they're trying to hold back housing prices in China. At the same time, we've got the US coming in with, shall we say, a faltering new growth. The comments from the Fed are very interesting, that there's still potential for QE3, but that they expect to make more positive statements about the economy. So investors, I think, are a bit on the edge here at this point in time.
Yeah, investors on the edge, and Goldman Sachs coming through, cutting its 3-month outlook on commodities to neutral from overweight. I mean, do you agree with the point about raw materials reaching targets after gaining and economic growth softening in the next quarter? Or is that perhaps a little too bearish?
Well, I think we were also quite realistic about commodities for the year, and we weren't bullish on a lot of these. And I think even we will be cutting our commodity price forecasts for the year. We're heading into an uncertain period. Investors are nervous about this, and probably some money will come off the table.
So is this a good time to buy then in the next few months to get some more exposure to commodities?
I think it's a little bit wait and see. I don't see an outright collapse, but I do see some softening of prices and some softening of demand. And unless there are some supply interruptions, maybe there'll be some cyclones in Australia to affect iron ore production. Perhaps there will be problems with Grasberg on the copper in copper supply. So I think there could be interruptions, but nothing seems to be going wrong at the moment. And we've got big stocks in copper in Shanghai and at ports around China. That says to me that prices really ought to soften a bit.
So which is the one commodity to watch? What would make a good buy right now?
Well, I think investors should really look at tungsten. I think that there's a market where there's a big supply-demand gap. Supply is so far ahead of, demand is so far ahead of supply. I think it's really the key commodity. It's a strategic commodity. I think any of those tungsten players are worth having.
All right, John Meyer, Head of Natural Resources and Mining at Fairfax. Thank you again.